Let's start with Cheniere.
Yeah, Courtney, first off, important to kind of lead in that we are of the view that a market bottom is forming. I think you get the upturn once seasonals improve in the fourth quarter. So I think it's important when looking for low volatility exposure, trying to find ideas that should be able to keep pace in a strong market backdrop, or at least those ideas that have historically kept up in prior bull market periods. So we have identified three names from this low vol ETF. The first one is Cheniere. First off, we think the energy sector is an attractive portfolio diversifier that's been less correlated to recent market swings. And when looking within that sector, Cheniere, ticker LNG, is really best of. It's one of the few stocks that not only was able to rally above its 2018 peak, but its 2014 high as well. So we see that as a sign of long-term secular strength. More recently, the stock is correcting into its recent March peak. It comes in at $149. We recommend buying the pullback into that support level.
All right, let's look at it seems like it's on everybody's buy list, and that's T-Mobile, right up there with Ulta. But T-Mobile is one of the frequent names.
Stand out in the telecom space where you have bearish trends in AT&T and Verizon. Again, T-Mobile, best of. It provides low volatility exposure to the NASDAQ 100. Again, I think the NASDAQ does have some better days ahead after really feeling a brunt of this decline year to date. So when looking at T-Mobile, I think what's most notable is the stock is already out to a new high on a relative basis versus the market. What that indicates to us is that the stock is positioned to break above its prior high at $150. Once market conditions firm and that headwind is taken away. And so we do see additional upside and pre-breakout potential for T-Mobile.
And United Health, this is another name, like Tyler was mentioning about T-Mobile, that I do see see pop up on a number of folks' lists. What do you make of United Health here?
Really just the steady eddy, just been in a long-term uptrend, continues to grind higher. I think managed care, speaking in terms of the industry, has been one of the stronger pockets of the healthcare sector, best of the sector. And I think United Health is the one of the stronger charts and best of that managed care group. So it's a stock that has paused below its April high at around $550. Some may see a double top. We see a pause in an uptrend. I think as long as $500 support is intact, that's the stock's 200-day average. I think it's just a matter of time before United Health breaks out to the upside once market conditions firm, possibly in the fourth quarter.
All right. Ari, thank you very much. Ari Wald, we appreciate your time today.